The following is a presentation of TFNN. Live at TFNN, the Money Masters. Now, your Money Masters, Tom O'Brien and Steve Rhodes.
Welcome, folks. You got half of the Money Masters. Tom is on vacation this week, so I will be doing the show solo. You're welcome to give me a call, 877-927-6648. Thanks so much for joining me. You got the Dow futures off 125, S&P's off 17, Composite down 39, Russell 2000 off 10 points. And you can always follow us on Tiger TV, folks. Just go to the homepage at TFNN.com, click on the Tiger TV button. You'll be able to see our charts live here. You will also, you can also bookmark that. If you go to the homepage at TFNN.com, over on the right-hand side, you'll see a little area, a little red box area, and you'll be able to click on that, bookmark that on your device, whether it's an Android device, an iPhone, an iPad, and that way we're just simply one click away from you being able to start and get the charts. This show here is archived on Channel 10, so if you'd like to catch the archives, maybe understand and get a little training, just like we're going to talk about here this morning, we're going to take a look at where the markets are, where they're going to go, where they're up against some nice support areas. And when we started I do the 9 o'clock show for any of you that are listening in that haven't heard that show. You can always catch that at about 9:06 is when it actually fires off here. And at 9:06, we were taking a look at this chart right here. So that's where we're going to pick off. That was the 120-minute ES Mini. That's the S&P futures contract. It was trading. It was holding at the 1.272 area before it started to bounce just a bit. What I said and what we were able to do by taking a look at Fibonacci expansion numbers was that if that area failed, what you would do is you would see it move down to the 1.618 expansion off of swing points. The swing points that I'm talking about happened to be the low that came in at 4:15 at the close on June 21st, up to the high that was put into really Friday at about 4:15 as it traded up to 1331.75. And so you can see right now you're taking a look at this tool that I've got on my charting software. This charting software is Ensign software. Ensign Windows is the version that I'm running. And what it does, it's a beautiful thing because there's a tool on here named after none other than Larry Pesavento. It's called Pesavento Patterns. And what it will do, folks, it will measure the expansions and contractions of swing points for you automatically. That way, you're not always having to do the math on your own. And what you're looking for is you're looking for the convergence of really expansions and contractions coming together at the same point. In this case here, you'll see the 1.618 in that 1309-ish, 1308 area. You're trading right now at 1310. What you'll also see off of a swing point, and this is the swing point that goes back into 7:30 at night on the 11th of June. That happens to be, that's this right number right here, a 0.786 retracement. Now, what you have to pay respect to is you have to certainly pay respect to this waterfall cascade. This could easily be set up in AB equals CD down. And if you take a look at that, let's just go ahead. We'll wipe off first, if this area here, 1308, fails, where the ES Mini will move down to is in that 1298 area. 1298, if you just simply come to full moon, the full moon off, no, it's not even the full moon. This happened to be the June 1st low because I believe the full moon came in on the 4th. If you just simply come to the most major intersection, I thought it was June 4th. No. Well, if we take a look at the ES Mini traded down as low on June 1st, down to the 1273.50. So if you just simply start with that as our low, and you go all the way up to the highs that were put in here on, I believe it was Wednesday, June 19th, up into the 4:15 time frame, up at 1353, and you just simply measure that area, folks. What you'll see is the 0.618 retracement area, which is normally where a market, once you make it through a 0.382, that is normally where you would head to. That would be the next area. But you have to be paying attention to this A to B leg because the A to B is very, very significant here. And if we go ahead, I'm going to take the retracement tool. I'm going to go ahead and just for the time being, take the Pesavento Patterns tool off here. So we'll clean this chart up just a little bit easier for you to read as you're following along with us at home. So now let's take a look at the AB equals CD pattern that is possibly setting up out here. Our A point again being the price point of 1357 even. And we come all the way down to the B point, put in at 4:15 in the afternoon on June 21st. The low is 13.1750. Makes a retracement again. If we take a look at the session of last week, certainly the high, and we know that that was a 0.382 retracement. Now, as we take a look at price, you can see price traveling along the inside leg of that C to D area. And the 1-to-1 would take you down to 1262 in the S&P futures. But what you will see here is you'll see the 1.272 expansion of that A to B equals CD gets you into 1281. So this area here fails that we're at right now, the 1308-ish area. You won't just go to the 0.618 retracement, in my opinion. You will go down to the 1281 range. That'll be the 0.786 retracement. That would be setting up a Gartley buy pattern. Of course, you have to wait for some other signals. Why? Because if we take a look at the power of the A to B leg here, what you actually see, even though you had this cascading waterfall effect coming off of the Thursday session last week, you can also see that price right now is moving on the inside track. You start moving on the inside track, it tells you that this leg down here has energy to the downside right now. No volume, don't need to be taking a look at volume. Just pay attention to the closes on these candles. This here is a 120-minute chart. If we switch over right now, we'll go take a look at a more intraday chart. We'll take a look at the 10-minute chart out here. The 10-minute chart is not showing a single bullish candle out here. You haven't seen a green candle. Not that necessarily is bullish, but you haven't seen a up candle on a 10-minute session since 9:10 this morning. So the market continues to move lower. There was this little hammer candle here that that is trading below right now. That came in at the 10 o'clock time frame out here. So that's on the 10-minute chart. If we go take a look and put this on a 30-minute chart out here, just again continuing to look at intraday, what you are seeing here on the 30-minute chart, coming off of the first Spanish issue. When I say the first Spanish issue, folks, is when we came in to work, if you will, or if you were watching the futures open 2 weeks ago Sunday, that would be June the 10th. That was when there was an announcement that they were going to fund, and who the they is, because they told you where the money was coming from, but unfortunately the fund where the money was coming from didn't really have the money. So, but nonetheless, the PR firm that was out there told you that the Spanish banks were going to be refueled with, I believe it was 125, maybe 135 billion. What's 10 billion here or there? The market didn't buy it. I didn't buy it. The market opened up Sunday evening in the 1342 area, and it traded down. Talk about a little bit of a waterfall down. Now, that waterfall stopped, ran out of water, ran out of down movement as it was making 100% move. This is again on the 30-minute chart here. But as it was coming down into the June 11th time frame when it got down to 1298.50. Now, if we just simply take a look at from that area, so this is the Spanish Armada out here, and here's the low that was put in. If you just simply come from that swing point up to the highs that were in there, you'll see that right now you're at that 0.786 area. That happens to be, say, the 1310 area. This doesn't hold, then that is going to set up moving to the 100% move of a move, right back down into that 1300-ish area. You can expect that when you make a move of a move, and you really haven't done that here as I'm taking a look at this chart, as you get down there, that would be your next area of support. What you'll also see, again, this is on the 30-minute chart, you'll see that now an expansion of that set of swing points. That's from the Spain when it was doing the holy mackerel, the Spanish mackerel, down there at the 1300 area, all the way up to the high at 1358, you'll see a 1.272 expansion right also in that 1280 area. So at 1280, you've got a 1.272 expansion. And that was, if we also take a look, so now that's on the 30-minute chart. Again, we'll go back. I don't recall if I changed the time on this, but we'll go back to the 120-minute chart just simply to be able to pull all this together so you can see where you have, let me do this here, window, tile, vertical, so we're going to come back here. So that was the 1280. I believe it was 1280. So 1280, which happens to be the 1.272 expansion of an A to B equals CD. And then you've also got an expansion of swing points out there. That, to me, is where the market wants to trade to. That's where the S&P wants to trade to. Just taking a look at that C to D leg and taking a look at everything else that's going on out there. 877-927-6648. Who's going to be my co-host? Give me a call, folks. Let's go take a look at the King dollar out there. How about that? Just lost a little bit of throat noise there. So we'll take a look at the King. All that the King is doing so far, not really much movement here since the 9 o'clock show. You're trading at 82.75. What the King is trying to do is get inside and stay inside the swing point from June 1st. So it'll be important to watch how the U.S. dollar index trades. That swing point low is 82.70 or 82.75 right now. So, not a lot of conviction. In fact, not a lot of conviction. So when you take a look at the move right now to the downside, and you just take a look at patterns that are on their way to completing, if we take a look at bonds and go see what James Bond is doing out there, you've got the 30-year Treasury out at 149.09. Would have been better if it was 149.07, don't you think? So we'll say it was 149.07. Because this was the James Bond. And so it's trading at its session highs, but not exactly having the hugest of moves out here today. So maybe that is giving us some type of signal. You can see bonds really trading in a sideways trading range ever since June 7th out here. Building cause, most likely, to move higher, believe it or not. So building cause to move higher, that's at least what the Treasury bond is saying to us. If we go take a look at the gold marketplace, let's take a look at the continuous contract out here. You got gold right now trading out at 15.72. That is up $5 and change. So gold not doing much today, other than we know that what gold really wants to do here, folks, is it wants to get down and test again the lows from September 26 out at 15.35. It may even get down and test the lows from December 29th out at 15.23.90. And talk about being in a sideways consolidation. Number one, when you're taking a look at this chart here, folks, gold is in a long-term bearish mode right now. And from my analysis, gold wants to actually pull back to 11.55. And where I get that from is, again, looking at the weekly chart out here. And on this weekly chart, folks, you're going to see that gold, what it did was it broke a long-term uptrend. And that long-term uptrend goes back to October 2008. Silver doing the exact same thing, setting up the exact same pattern right now, is in the process of breaking its uptrend channel. That says that the King, the U.S. dollar index, just simply because you got gold and silver measured in dollars, the King is going to be moving higher. That sets up an A to B equals CD down, just like we were looking at on the ES Mini. And gold likes to correct more than the ES Mini does. That would set up a 1 to 1.618, A to B equals CD down into the 1145-ish range. If you just simply come off of the most significant swing point low, that would go back to October 2008 when gold was at 681. Had that reversed. 681, folks. So gold wants to, that's not going to do this overnight. It's going to take a while. But 1155, I'll be a buyer all day long when gold gets down there. 877-927-6648. Got the Dow off 155, S&P's off 20. Apple trading down $6 right now. We'll be right back, folks.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you gain access to each host charts and computer screen as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, Dave White, Larry Pezzavento, or Victor Jones, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV yet, then visit TFNN.com today to see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
It's that time of year again, and the Great Panther Silver Summer Silver Giveaway is back. Every day in June, Monday through Friday, we'll be giving away a Great Panther Silver 1-ounce silver bar, and all you have to do to enter is visit the front page of TFNN.com and fill out your entry. Great Panther Silver and TFNN wishing you a great start to the summer. Sign up today to have a chance to win a 1-ounce silver bar during the Great Panther Silver Summer Silver Giveaway the whole month of June at TFNN.com.
Stock market corrections are the number one reason that a buy and hold investment strategy produces the poorest results, and I have 73 years of data that proves it. Now, the good thing about economic difficult times is that the worst economy can produce the best rewards in the shortest period of time. In fact, during the last 130 years, 61% of that time period has been spent in recession. And if you're one of the 70% of American households relying on their 401ks and IRAs for retirement, you need the single strategy that is bulletproof against the turmoil of our stock markets. Go to the homepage of TFNN.com. Under Breaking News, click on Success is a Numbers Game to receive this must-have free report. This bulletproof strategy may be days away from giving the next signal. Don't neglect your retirement, and don't neglect this signal. If you're even a little bit interested in accumulating wealth, providing a better life for you and your family, then go to TFNN.com to order your free copy of Success is a Numbers Game today. Implement the disciplines contained in this report, and success will be yours for the taking.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks. Got the Dow off 163 right now. S&P's up 21. And let's go to Jeff in Springfield, Missouri. Jeff, thanks for calling. Thanks for holding.
Yeah, good morning. How are you?
I'm doing great. Yourself?
Doing great.
You've been a resident of Springfield for long?
About 30 years.
Oh, that's great. That's great. How's the summer? How's the summer there?
It's starting to heat up. Pretty good. Yep.
Oh man, that's great. That's great. You wanted to take a look at H.M. Gartley.
No, well, I wanted to ask you about the Gartley pattern. You and Tom were talking about the Tiger Gartley for the ES, kind of getting up to that 13, I think 70 or 90 area, and now, you're looking at kind of going lower. So I just wondered, I'm kind of new to your program and just trying to learn, and just wondered if that pattern was no longer valid, or if it still was, or just any comments.
Okay, all right. So let's go take a look at the S&P cash, because that's what we're first talking about out here. So we're going to pull the SPX up on the screen here, and in order to have a Gartley pattern, Jeff, what you want to make sure is you've got an A to B equals CD pattern that is out there. Okay, so that's the first thing that's present. So at this stage, that pattern, is really still in effect and still be still may be being formed. And now what we've got is we have an A point and a B point that's established. So it's a little bit different than the B point that Tom was originally taking a look at, I believe. But I'm just going to speak to you based on what I see on the charts, and we'll not worry because Tom's on vacation. And so when I take a look at the A point is absolutely, when you take a look at the S&P 500, you're looking at the low put in on June 4th, our full moon low out there, out at the price point of 1266.74. The B point on this now would happen to be the June 19th high out at 1363.46. All right. Now, what the market is doing, it's retracing back as we've taken a look at, and we're taking. When I was, if you're listening to the show, I was looking at some other intraday. I was looking at the S&P futures contract out there. If we just simply do a retracement from the low, from the June 4th low up to the high out here, I first have to actually grab the tool. There we go. So now we'll grab it and we'll go from the low to the high. Right now what the S&P has done is it is pulling back into the 0.618 retracement area. That number happens to be right around 1303. Okay? So at 1303, that could be setting up our C point. And we'll know as the market moves down into that area. And how I'll also gauge it is what else is going on intraday inside the charts. If it gets to 1303 today, it'll be a wide-ranging bar, Jeff, on the way down there. And that says to me that what that really sets up is probably the 1287 range. But until June 4th gets taken out, what this is setting up from a volume perspective, as well as just simply set up for the summer, could be an A to B equals C to up. So let's take a look at those two areas here. And I'm going to leave on my screen. Are you watching us on Tiger TV?
No, I'm not right now.
Okay, so what you want to do, Jeff, is maybe catch the archive of this show, and make sure you tune in during the segment, because I'll show you the two different patterns that are out there. So I'm going from the low of June 4th up to the high, put in on June 19th, and I'm going to come all the way down to the 0.618 area. If that ends up being the pattern, and we have an A to B equals C to up, that will take the S&P into the 1399 area, 1400. And what else is up there happens to be the May 1st highs. So that would be one possibility. If the market retraces back further, I'll draw the second one up here on the screen here. The second pattern would take you into, so let's say the market pulls back to 1287. Now, and what you'd be taking a look at there is then 1380. And you said, I believe, 1380 was the number, right, that you were kind of gauging things on?
Yeah.
Yeah. So 1380 then becomes an A to B equals CD pattern. So at this stage, we just simply have to wait and see how things unfold. Right now, from a, you do have a market pullback. If we take a look at volume, if I just simply come over and take a look at the ETFs out there, and we'll specifically go take a look at the SPYs, just to keep things here with the S&P 500. So we've been trading for an hour. It is a Monday in the summertime. What you have done is 43 million shares. So 43 million shares coming into where it broke out that had 183 million shares, and it's trading inside the swing point. Not the swing point, but it's trading inside the day from June the 6th. So, it's got volume right now. We'll see if volume continues throughout the day. I'm just going to switch over to a more intraday chart on the SPY so we can have a better idea for volume. But I do want to answer your question. That is this. There still is a Gartley pattern that is trying to set up to move the markets higher before it actually gets totally sold off. Does that help you?
Yep, that does. Thank you so much.
Okay. Catch the archive on Channel 10, Jeff, and thanks so much for listening.
Thank you.
You bet. 877-927-6648. Dow off 167 points. S&P's off 21. Apple trading down $7 and change. We'll be right back, folks.
Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day.
Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations, including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. TFNN has just launched our most exciting sale ever. If you purchase any amount of Tiger Dollars before Sunday, June 24th, you'll receive access to 7 live 90-minute webinars hosted by each of our technicians here at TFNN. Not only do you get a 20 to 30% bonus on your purchase as you normally do with Tiger Dollars, but with this one-of-a-kind offer, you get over $1,000 in added value completely free. Each 90-minute live webinar usually sells for $149, and you get all 7 of them absolutely free. Tom O'Brien, Steve Rhodes, Basil Chapman, Larry Pesavento, Ken Shreve, Dave White, and Kate Stalter, you get all 7 classes completely free. Whether you're an experienced trader or you're completely new to the markets, this sale is perfect for all levels of investors. Don't miss out on our best Tiger Dollar sale ever. Visit the front page of TFNN.com today and purchase your Tiger Dollars before June 24th. Don't wait and risk missing out on this one-of-a-kind offer. Act now. Has the current market volatility continued to stop you out of trades when temporary market spikes move against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the advantage of keeping your trades open even when the market temporarily spikes against you. Nadex's innovation has allowed them to come up with a line of unique short-term binary options that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks. You got the Dow off 157, S&P's off 20, and let's just follow up on our call from Greg Jeff in Springfield, who was calling about the Gartley patterns that are out there. Now, one of the things that you always have to be willing to do, folks, is you have to be willing to redraw patterns as the market gives you more information. And that's what you have to do on a continuous basis. You have to always open your mind up to what is the market now telling me. It may impact your existing positions, may impact positions that you're looking to be able to get into. And because the markets are always going up and down, they're always doing these breathing patterns. What we're trying to find out is where is the real energy of that breath that is out there. And so there's a number of signals. So Let's take a look at two patterns that would really converge to the same point. Now, I'm taking a look at the 120-minute chart. Just simply has less noise on the screen here. I certainly prefer to be taking a look at the futures contracts to be able to make your decisions about any ETF structures. You just have more data, more information. You can take a look at the candles. You can take a look at volume as well. But if we do take a look at the two patterns that were out there, so when we opened up the show, I was showing you the expansion coming off of the Spanish Armada. I was really referring to the day when we came back after a weekend and Europe announced that they were going to go ahead and retool their banks. Of course, this morning, if they were going to retool their banks and that was all set, why, is in the media, why are they talking about that Spain is now officially asking for help in their banks? Geez Louise. In any event, it doesn't really matter. Let's just go take a look at patterns that are out there because you want to be able to learn how to trade patterns. So there were two patterns coming together on the ES Mini at the same time. You're taking a look at coming off of the lows here on June the 3rd. The low that we were looking at on the ES Mini on the 120-minute chart is at 1262. So what I'm suggesting here right now, the charts are telling us that the ES Mini wants to trade down in the 1280 range. That's a 0.786, and that would be a Gartley buy. Now, what does that Gartley buy look like? It looks like this, folks. I'm going to go ahead and draw this on the screen. You're going to see some little wings on there. And what that Gartley buy looks like is this. It's that light blue area. Now, what I'm going to do at the same time is I'm going to go ahead and get rid of the ABCs out there. So did we just clean this out? And the Fibonacci area. And so that is one pattern that you have coming together there. Okay? So you got a 0.786 Gartley. We know it happens to also be a 1 to 1.272 A to B equals CD. What you also have is at that same point happens to be a butterfly buy pattern. That butterfly was starting here at the low that we're talking about at 1298.75. So again, that would be our low. Our high would be the same thing. Now I'm just going to draw this on the inside here, and I'll try to change colors on this just to make it a little bit easier for you to also visualize. And it is really all about visualization. And so what you can see here, hopefully you can see it. What you've got, see, you got this 1.272. So you got a butterfly pattern, a butterfly buy, and a Gartley buy pattern coming together. The ES Mini doesn't have to trade down there. What I'm suggesting to you is that you can draw these patterns in advance. You can have your expansions and contractions. You can have your ABC patterns that are out there. And what you can do is just like fishing. You'd just be out there sitting. You'd be waiting for, to see if the market goes ahead and takes your bait, if the market moves down there, and then gives you the right candle signals. So you have to be able to understand what's happening as the market is hitting that area. And that area right now being at 1281-ish range, where you've got two nice patterns on the 120-minute chart setting up. You can go to daily, you can go to 5-minute and 1-minute charts and watch breathing patterns and watch Gartley buy and sell patterns come together, just like we did here on the 120-minute chart. Let's go to Bobby in Greeley, Colorado. Bobby, thanks for calling. Thanks for holding. Maybe we're not going to Bobby. Bobby wanted to look at. Let's go take a look at it. Wanted to take a look at ticker symbol GG, which is Gold Corp. So we'll go ahead and put Gold Corp on the line there. And we do appreciate Bobby calling. And if you are just accidentally got cut off, feel free to call back in. So let's go take a look at Gold Corp out there. Again, GG is the ticker symbol. Gold Corp trading out at $37.30 right now. The problem is I don't know what Bobby was calling about. That's why we would need Bobby to call back. What you did have with Gold Corp is it did make an A to B equals CD up. You can see that pattern drawn here. That was off the lows in Gold Corp from May 16th. The low out there of $32.16. We had a light blowout here, folks, so my apology because it got a little glare here trying to see some of the screen. But we're going to get that fixed here hopefully this week and get the regular lighting system back in here. And so you got an A to B equals CD up. That takes you into the 41.36-ish range. That was the price projection. And it actually got up to a high of 41.24. You got to love that. 41.24 versus 41.36, off by 12 pennies. Now what you've got is Gold Corp is pulling back, and it's coming back really into the last area here where it broke out a little bit. That was on June the 1st. and not suggesting that being a buy. It has not made any kind of pattern on the way back here. If we take a look at the retracement that it has done, come off of the lows, up to the highs, it is right now headed down to the 0.618 area, would be $35 and change. If we take a look at let's go take a look at the longer term. Let's go take a look at a weekly chart here on Gold Corp. Let me refresh this, make sure I've got all the right data, most current data. There we go. So Gold Corp right now, what it's doing actually this week, so this will be important for anybody who is trading this. The swing point low is May 18th, 38 million shares down there, and the high on that is 36.37. You've traded so far today down to 36.26. So kind of interesting. 36.37. You have gotten down in there. So far, you have rejected that area. So you're going to want to see if you get Gold Corp to close inside 36.37, what that will set up is wanting to at least test the bottom of 32.16. So hopefully that helps with what I do think Gold Corp really wants to trade to. The better buy on Gold Corp is going to be out at $31.02. And the reason I say that, if you take a look at the weekly chart, you go back to October 2008, and that has a high volume bar out there. That should be some pretty decent support. So that was on Gold Corp. Let's go take a look at stocks that are popping and dropping out there. Priceline off $13. So let's go see what's going on with Priceline. Currently trading out at 653.71. PCLN is the ticker symbol there. See what kind of volume Priceline is doing today. Priceline on the way to make an A to B equals CD down. That would take it down into, I would have to say here, it's going to take it right down into at least this little breakout in the 587-ish range. But more likely, what it wants to trade down to is $497. Right now, I've got to redraw let me redraw this ABC pattern here because of the retracement that it did. So let's take a look at the new ABC pattern that's out here. The 8-point that we're using on this is the April 30th swing point high of 772.35. The new B point on this is going to be down here on June 4th. That B point only has 1 million shares, so it shouldn't be too tough to take out that B point. That would set up the 1-to-1, bringing you down to 514. And the 1 to 1.272, which I suspect is what it wants to do, gets you into that 469 area. So far today, trading down with 204,000 shares in the first hour or so in trading. So 204,000 shares sets up about a million plus a day. That's after doing a retracement up to its high on 915,000 shares. So Priceline not really doing a whole lot today. If we take a look at, let's go take a look, we're looking at Priceline, let's go take a look at Apple. See what Apple is doing. Apple trading down $7.83 right now. Apple has not really been doing much here for a while. It has been trading sideways on relatively innocuous volume today. So far has done 3 million shares. That's really setting up another low volume day inside Apple. Friday does 10 million shares. The prior session, 11 million shares. It is probably setting up another, 10 to 15 million share day. So no great shakes here on the Apple tree. If we take a look at, let's go see what's popping out there. You've got CF Industries. CF Industries, CF is the ticker symbol. Trading out at 184.33 right now. So you got CF Industries trading into the downdraft here that was established on May 4th. May 4th comes off of the high with conviction, comes off with 3.8 million shares. Right now you are on the way up here. You're passing the swing point from June 20th. That had 1 million shares. You've done 844. So this is trying to make its way up, looks like, to the highs, to the May 3rd high. Certainly it's got to work off some of this supply line on May the 4th. Again, 3.8 million shares going. That was off of the highs here. So coming off of the highs again with 3.8 on May 4th. Today so far, 846. So you do have some good volume in here. Let's see if this thing has any news. Let's see. No, not anything out there that I see that is news related that would be driving this. If we take a look at ABC patterns, take a look at the low from May 17th out at 154.17 up to a high on May 30th out at 174.41. Retraces back right now. It is on its way to making a 1 to 1.618 A to B equals CD, maybe making even more than that. Excuse me. Let's take a look at the current smaller ABC that this thing is on today. And 194. So what this is saying, folks, is this wants to get up and test the high of that downdraft day for May 4th, which would be 194.92. So watch CF Industries as it makes its way up there. Let's go see what we have going on inside the IBD 50. Let's take a look at dollar-wise. So Priceline and Apple, the two big ones. You got Chipotle, CMG, the ticker symbol. That's trading off 4 points right now. Let's go take a look at that stock. And Chipotle is trying to make an A to B equals CD down here. Let's see where she is trading. So Chipotle trading off volume-wise so far 116,000 shares, and that's going into 521,000 share day going back to June 18th. But Chipotle giving you the signal, just like CF Industries did, not behaving at all like CF Industries, but Chipotle, excuse me, on April 20th, you had some absolute institutional selling going on, coming off of the highs with 2 million shares. The B point on this is not going to be too tough for it to be taken out. 676,000 shares. That's at a low of 384.49. You're trading at 411 right now, but it does have a target of the 360 area. Let's see what else we have moving inside. So we're not seeing any major volume here, folks. That's really what the charts here are showing. So MasterCard, and these are the high flyers out here. So when you take a look at the IBD 50, the cult stock. So MasterCard trading out right now at 431. Of course, these are the stocks that you want to be able to short with the right setup. So if we take a look at MasterCard, not really much going on out there, even though it's down just a few bucks. Volume-wise, though, as long as we're on the chart, 187,000 shares. So nothing big out there. Let's go take a look at let's go inside the Dow, see what's leading the Dow down dollar-wise. You got Caterpillar. So we know Caterpillar's in a long-term sell mode. ExxonMobil, Chevron Corp down a couple of bucks. So let's go take a look at those stocks out here. So on Caterpillar, and I said long-term sell. And the reason why I said that, folks, is if we just simply, and I've got a special report that I've done. If you have not gotten that special report, go to the homepage of tfnn.com. You'll want to check that out because it helps you to understand when you should be in a stock, when you should be out of a stock, period, from a longer-term standpoint, especially when it comes to your retirement funds. This case here, happened to pull up the monthly chart for Caterpillar. It gave you the signal going back into April that this thing was now in a bearish phase. And that's on Caterpillar. If we go put this and take a look at the daily chart, though, see what's going on daily-wise. You are trading right now below, looks like below another swing point, yeah. So you got a swing point low of June 4th, 82.73, 9.8 million shares. You gapped down this morning, you've done 3 million shares. So this thing's going to have the volume in this. This is going to set up another move lower today with the close below 82.73 on Caterpillar. You're at 82.38 right now. And where does Caterpillar want to trade to on the daily chart? Wants to come all the way back to October 4th. The October 4th swing point, 67.54 to 72.76. So if you are inside Caterpillar and you want to stay in that from a long-term standpoint, you should expect to feel that kind of heat and do the assessment yourself as to whether or not that's the type of kitchen environment you want to be in. That's going to be $67 is what Caterpillar has written all over it. If we take a look at ExxonMobil, XOM is the ticker symbol. Let's go see what ExxonMobil is doing this morning. Gapping down. Let's take a look at volume here. So volume-wise, so far, 11 million shares. That's not a huge deal. It's going to come down and test the swing point into June 5th, but that only has 17 million shares, folks. 877-927-6648. Dow off 160 points right now. S&P's off 20. We'll be right back.
Are
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Rand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Got the Dow off 154, S&P's off 20, and looks like the Supreme Court is not going to rule on the health care case today. Not sure exactly what that means, but it does mean they're not going to rule on the healthcare case today. We've got the XLF on the screen right now. It's trading out at 14.05. Of course, it looks like we might be having some feed problems out here. I'm going to check this out just to make sure 14.05 is, in fact, the right price here. So I don't want to be giving out the wrong information. XLF, let's see. 14.05 is the number. Okay. So we got 1405. It's trading below the 0.382 area of the move up. The move up that I'm talking about is really coming off of the June 4th low out there at 1330. Makes a high on last week on the 20th out at 1463. Let's see what the XLF here is trying to do. Again, the XLF, you really have to go in and take a look at the, because this thing has been rebalanced, just as the Russell 2000 was on Friday, I believe. And if we take a look at the XLF, the reason is because they've changed the holdings that are inside there. So if you go to the Spiders, SPDR, just type that into your search engine and go to their website. What you want to do is you want to punch in XLF and then download the current holdings to see the top 10 are inside that, so you can see what those exact charts are doing. So I hesitate to compare the XLF because we're not comparing apples to apples, and that's always a problem. So the better thing on the XLF is I'll put those top 10 holdings on a chart on my screen maybe tomorrow, so we can better take a look at the XLF and see what's going on inside there. If we take a look at let's go take a look at the XLK. I don't believe that has changed out there. The XLK trading out at 2802. That is the technology sector inside the S&P 500, and that is the number one weighting structure inside there. It's roughly around 23% or so. So you got the XLK pulling back today on thin air. Let me make sure that I got the data feed here, because I do not want to give you bad info. So the XLK trading out at 2802. And yes, absolute air on this pullback here, 1.3 million shares. Now, this thing gapped up on June 6th, did it with 8.8 million shares. The low on that, and you're trading inside that candle right now. So the low on that is actually 27.71. So you'd actually like to see it pull back and test that 27. You'd like to see it get to 27.70 and reject that area. That might be setting up a nice trade there. If we take a look at just simply retracement from the low that was established on June 4th up to the high, you can see you've traded down below the 0.382 area. So the 0.618 on this happens to be 27.77. That says 27.71 on the XLK is absolutely game, and that's where it would give you a nice piece of information, and that would then set up an A to B equals CD if you can get the right volume. And that would also keep so take a look at this on the XLK. You actually have an island reversal out here. So as long as the XLK doesn't get down to 27.56, that island, and those are very powerful candle configurations, folks, that island would still be in place. And what that would do, that would set up your A to B equals CD somewhere in about the $29 range. And so it'd be a nice trade. That would make sense. That's where you have a gap down as well. It's also where you'd be running into the February, not April. The gap down I'm talking about is from May the 3rd. The low on that gap is 29.61. Now, if you were trading this, folks, what you want to make sure is you're using the right stop. So go to the homepage of TFNN.com, and in the carousel, you'll see my position size calculator. If you haven't tried that, there's a video that goes along with it. You absolutely should, folks. Thanks for being here. Up next is Basil Chapman. Then we go out to Tucson, Arizona, to Larry Pesavento, 12 to 1. David White from 3 to 4. I'll be doing the Tom O'Brien Show from 4 to 6 today, folks. Thanks for being here, and have a great morning and a great afternoon. See you at 4. Bye-bye now.